Hi everyone and welcome to this week's market commentary. Hope you're all doing really well. It's certainly been a fascinating couple of weeks since the last market commentary with everything that's going on with Greece. And it's certainly made for some interesting things. So I'm just going to actually go into that in a little bit of detail today, just so we can understand how we trade or if we should trade. And I think that's going to be the most important thing while this is going on. Now, one of the problems we have with Greece is we simply don't know how long it might or might not last for. And while that's the case, the markets are reflecting that, especially with the gaps that we're seeing. But although that is the case, the markets are still playing out in a way that, with these gaps, some of the structural elements are worth paying attention to and looking at. There is also some opportunities kicking about. So it's just a tricky time to trade, and you've got three choices. You can either just trade as normal, and if you get hit, that's fine. You can reduce your risk, so minimize your risk per trade. So if you're sitting at 2% risk per trade, maybe go down to 1%, 0.5%, just while it's playing through, or you can sit in the sidelines. Last week's I basically sat in the sidelines because the gaps were so big and I just wanted to let the market play out. Whereas the markets this week, the gaps, although they were there, they're maybe not quite as big, and the market's maybe settling into things. So I'm more risk on this week, but we'll see what happens. Now, first market we've got here is crude. The reason I wanted to discuss crude straight away is we had watched crude basically sit in this range for the best part of about 6 weeks, and we've just recently broken out of it, and it's now broken this level as well. So what I'd be looking for is I'd simply be looking for short opportunities. Now there was a lovely little trade opportunity here and I didn't take it, and I'll explain why in just a moment. Where I've got that level, if I take it to the 15-minute time frame, what you'll notice is roughly at that level we've got a lovely consolidation. And I was looking at a possible breakout. The problem is, although it broke out, it was quite late on in the Friday. I knew the referendum was in the Sunday, and I just wasn't going to risk the capital. So although it has played out and played out well, I decided to stay out of that because of the time of day on a Friday, and I didn't want to have a position open over the weekend. But that one certainly played out. However, now that that's happened and we've obviously got some clean air further down, we can look for possible opportunities both from a day trade point of view. Maybe not as much swing, although to be fair, there probably is still decent space back down to the lows actually. So we could also look at swing. I would be cautious of 5,000, just the psychological round number. We may get a reaction there, but I would keep an eye on it. So that's one worth, and it's good just talking about the weekend problem. Now, let's take a look at the euro. Obviously, the euro is the euro currency is one of the main markets to potentially react, although most markets have. Now, you can actually still see on the daily the gap. The gap was really big 2 weekends ago. I think from the close at 11,176 and it opened just above 11,000, so it's almost 170-ish point gap. That's fairly sizable, but the principle and the rule that gaps fill is exactly what happened. Inside 24 hours approximately of that gap happening, the market had filled. Now, you can also see that we've also got a small gap just in here this Friday night, and that's, Sunday night. What's interesting about that is it's only a small one. It pretty much filled again within maybe 24 hours or so, and it's now starting to press down. But interestingly, although we've had these big gaps, the one thing that has remained true in a lot of markets, and I'm going to show you one or two more just to illustrate this point, is the structure of the market when it comes to support and resistance. So if I look at the key levels on the euro, I would say we've got a key level about here and a key level up about here. So that's the range of this market, because the euro dollar has been consolidating ever since this sell-off stopped round about March, April time. Now we've got some minor levels in this market round about here and here. And the question is, can we break them? But what you'll notice is, even if we take the round number at 11,000, it's interesting that when we gapped down on that one occasion, it was a large move, that's where we stopped and reversed off of. And again, that's where we've come down to at the moment. So interestingly, because that's showing as an area of support, if we can get through that, that could lead to some nice opportunity. The only issue we've got is we're within a wider consolidation. So from that point of view, volatility, combine that with the Greece news, it does make it tricky right now, but still the market stays within its structure. Another example of that is if we take one of the pound pairs, so it was the Great British Pound versus the Japanese Yen. And again, what you'll notice is we've had these gaps. Now, firstly, the first gap from the 2 weekends ago, that's actually not fully filled, but you'll notice there was a little gap that we had down on Sunday night. But what you'll also notice is it reacted at the previous support level that we have in here. Now, at this moment in time, we're seeing a bit of sell pressure come in based on some news we've had British pound wise, as well as what's going on in Greece, I would imagine. But from that point of view, it might be that we see some further downside. But that's two gaps that we're seeing that are staying within the structure of the market. And this is the really important thing. Gaps as well as news can be very, very distracting to the trading. Now, ultimately, the one thing that I look for when these things happen is, does the market stay within its structure, or does it break the structure? Now, quite often, if it breaks the structure and goes out of shape, that gives me a warning to be cautious. So the best example we can see of that is if we take a look at the Swiss franc pairs. If you remember, there was a massive, massive move on the Swiss franc pair going back a couple of months. So you see that. Now, that breaks the market so heavily that I can't trade that market. As it's now starting to play out, yes, I could potentially look at it now. Whereas if you look at the gaps that we've been seeing, whether it's euro dollar, whether it was that pound yen, maybe take a look and see what we've got in the Aussie pairs. So again, we can see we've got the gaps here. The markets themselves, this market, the Aussie yen, isn't the cleanest market, but again, it's holding true to these levels here. And that's where we're seeing some reactions at, and it's moving down from one level down to the next and so on. So what we're seeing basically with these gaps is, although they add to a difficulty in our trading, they are playing out within the structure of the market. So with that in mind, it does take us full circle, and this is where we can go back to the euro. And this is where we can look at what's been going on because of Greece. Now, the one thing that we're often aware of is, do we trade with news or do we not bother about news? Well, the reality is, the big money out there, the funds, the people that can properly move markets, often they'll have an understanding of what's going on and position themselves accordingly. So that's why you tend to find markets move before the news comes out. And one of the things that we've got here is, since May of last year, the euro dollar sold off. Now, whether or not that's completely to do with Greece or whether it's to do in part with the quantitative easing that the ECB's done, the reality is there are reasons for it. But this then asks the question, if something happens with Greece and Greece comes out of the euro or the default, which they're probably going to do anyway, what impact does that have on the euro? The danger is we can buy into the hype and think, right, I'll just sell euro without any plan of action or strategy. But because we've already done this big move down, I'm not completely in the camp and ready to consider selling this market just because of the news. And that's why it's really important that we look at not just the news if we want to look at the news, but also factor in what the price analysis and the market analysis is telling us. So what I'd look for instance, if I wanted to be bearish based on the fundamentals, is we really need to see these lows broken, which is back down here, to really have belief that then we're going to go into a new downtrend. And the question is, how much further would it go down, or has price, and this is the key thing, has it already been factored into price? So it might be that once things stabilise, we start to see a little bit of strength in the euro. But until this plays out, we have structure. We have these highs here and these lows here, and until we break those levels, we don't know which way the market will go. So trading in the middle of that does carry higher risk. So even if Greece wasn't on the sheer threshold of coming out of the EU, we still potentially wouldn't trade this anyway. And that's the point we're trying to make here. Now, just to finish off, let's just have a little look at the American markets as well. So if we take a look at the Dow, for instance, again, we can see the gaps here. But again, generally speaking, we're sticking to some of the structure. We've got a support level here. We've got support in here. And again, we had a little bounce. We did gap through it, but we've come back through it again. Yet again, gaps have filled. Let's have a look at the NASDAQ. Again, we're staying within the structure of the market. We're reacting to the support areas. And remember, it is an area, not an exact number. In the S&P, again, still got my drawings on from previous times. So the story here is, what we've got going on with Greece means that we've created volatility. The one challenge we have in our trading is that might at times increase spread, which means that could nick us in or nick us out of trade. So just be aware that spread might pose a problem during this time. If you're going to trade, you've got to make the decision: do you stick with your existing trading plan and just trade as per? Do you reduce your risk, or do you sit on the sidelines? There is no doubt this is a bit of a one-off incident, so because of that, I'm always comfortable with those that would choose to sit this out, because we should know and see the market get back to normal within a week or two. And the reality is, it's more important that we learn how to protect our capital, because once we learn how to protect our capital, then we can actually grow it efficiently. Whereas what often happens is a lot of people, without Greece causing mayhem, a lot of people make profit, lose profit, make profit, lose profit, and end up giving back more to the market than they get out of it. And it's because the desire to trade is so large. So that's why it's so important that we know and learn how to protect our capital. And this is a really good example of one of those times where you may want to consider if you continue trading it just at this moment until things settle down. So that's us for this week's commentary. Obviously, we'll see what's happening in a couple of weeks when I come back with the next commentary. Hopefully, we'll have further news which will let the market understand what's going on and start to position itself, which will then lead to movements that we can trade off of. So at the moment, just there on the side of caution. Trading signals will still come out if things set up, but as always, it's your responsibility whether you decide to take it or not. I'll obviously be back in a couple of weeks with the next commentary, and we'll see what's happening. So in between times, all the best, stay safe, traders, and a pleasure as always. Bye for now.